Maybe that's better. Maybe that's better. Good afternoon. Good afternoon. It's Ronco Johnson, your lifestyle focused advisor here. Thank you for joining us. How are you? It is Lifestyle Focus Friday, and this is when the lights go out. Are you ready? Hey, guess what? Today we're going to talk about policy loans. Yes, we're going to talk about how you can take out policy loans and avoid the common mistakes that most people make. I've been hearing from you, and I want to make sure that you get it right. And we're going to talk about the benefits of paying yourself back. That's right. Paying yourself back has its advantages. So we want to make sure that we always become a good banker, right? So that's what we're going to talk about today. That's our episode today. And we're going to discuss some of the common challenges when it comes to repaying yourself and then understanding the importance of life insurance loans and their repayment benefits. So we want you to stick around and learn a little bit more about how to use your very secret financial tool like the millionaires and billionaires do. Hey, this is when the lights go out. Are you ready? I'm Ronco Johnson. I'm going to see you on the inside. So stick around. Hey, everybody. I'm Ronco Johnson. Thank you. This is when the lights go out. Are you ready? Thank you for joining us. We got an exciting 45 minutes or so. We're going to talk about life insurance. We're going to talk about the benefits of paying yourself back and how to use these policy loans most effectively so that you guys don't get caught up and doing it the wrong way, you know? But first, we're going to talk about. I was reading this past week, and I learned that I think the number was 20% of life insurance policyholders throughout the United States have taken out policy loans. This statistic might surprise you, but life insurance loans are often misunderstood. So we want to be able to talk to you about that today and make sure that we're giving you the information that you need to make qualified decisions, right? That's what we really want to do. And if you're joining us for the first time, welcome. Come on in, have a seat. Sit back, relax, and unwind. We're going to talk about what millionaires and billionaires do. And this is one of those things. Yes, my name is Ronco Johnson. I'm a well-known financial professional. And my specialty over the last 26 years has been basically life insurance and wealth management. So I do have an extensive background in helping individuals and families navigate the complexities of using this very secret financial tool. So you're in good hands. But you're not at Allstate. So I want to say hello to everybody stepping in. I see our folks. I see my regulars jumping in online. Good to see you. Good to see you. Good to see you. I see Miss Henderson. I see you out there, Sam. Thank you guys for logging in. Hey, listen, if you guys have questions very early, today I'm open to questions. Today, I'm going to be open to questions. So if you're listening for the first time, all you have to do is click on the comments. I'm going to encourage you to click on the comments right there below and hit the words. And when you get ready to make a comment, put the words takeaways. Takeaways. These takeaways allow me to know how much information you're taking away from our program. And if it is something that is pertinent to you and if it's going to help you along the way. Okay, so we definitely want that to be part of the secret sauce today, if you don't mind. Okay, all right. So, what can we talk about that makes this thing go a little smoother? Have you ever thought about what can I use my policy loans for? How can I maximize the internal buildup of the cash that's inside of life insurance? Take my policy loan out, and most people, one, you don't want to make the payment. You don't want to pay yourself back. But two, what are the benefits from paying myself back? Well, we got to talk about that because there's a lot of people giving a whole bunch of hogwash out there that have probably never seen one of these policies a day in their life. So we're gonna debunk some of the misconceptions out there about using your policy. Okay? So if you would just do me a favor, hit the comments. I'm going to ask you to like. I'm going to ask you to subscribe. I'm going to ask you to tell a friend. And don't forget, I need you to get on our mailing list. I need you to be able to pick up on all the things that we got going on. Signing up for our bi-weekly and weekly articles. You'll be notified about trips, recipes, man, you name it. We got a lot of good stuff over there. So don't forget to go down in the descriptions and sign up and then send it to a friend. And just tell them how much you're valuing this value add to your financial plan, right? So, well, let's jump right into it. When we return, we're going to talk about the five. Yes, five. There's five of them today. We're going to talk about the 5 benefits of paying yourself back through life insurance. And I'm going to show you how. But you don't have to be worried about it ever again. I'll see you inside. Hey, join our Lifestyle Focused Wealth community. Membership starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. Hey, I'm going to encourage you to, if you haven't done it already, you need to be a part of our Lifestyle Focused Wealth team. You need to be a part of our community. We need you. Everything we have to offer is inside the room. And we want you to be there. We want to be there. We want you to be there to talk about it. So let's get into it. Let's get into it today. You guys got to forgive me just a little bit. My voice is a little scratchy, but we're going to get through it. We're going to get through it. Today, we're going to talk about the number one, access to your cash. One of the benefits to paying yourself back. And before I do that, let me set this up properly. When you're dealing with permanent life insurance in many ways, whether it's whole life or IUL or UL, it does have cash value that you can take policy loans from. Now, each policy is different. So I'm going to be discussing policy loans from a whole life insurance policy or a dividend participating whole life plan. But you might want to just sit with your advisor, make sure you understand how to use your loans properly. And then most importantly, how to pay them back, because the payback is a little different, right? It's a little different. And we want to make sure that you're doing it properly. That way you can take advantage of this tool the way it's supposed to be, right? So what do I mean by that? What do I mean by that? So we already got people chiming in. We already got people chiming in, right? So, we're going to talk about number one. Number one, access to your cash. Here we go. Life insurance loans are allowed by policyholders, right? And you're allowed to borrow against your cash value from the permanent policies that you own. So this can provide a quick access to your cash because the value added to it is you can use cash for whatever you want, whenever you want. No waiting till you're 65, 65 and a half. No state, no federal, no penalties, no taxes. These are some of the advantages of why having access to your capital is pretty good, okay? These are what I would call the main reasons why people want to have access to them, okay? And if you're wondering, why is he speaking so slowly? Because I want to make sure you get this right. I want to make sure you get this right because there are too many people on the internet that are saying so many different things. Number two, the payments are flexible. Yes, ladies and gentlemen, the payments are flexible. This is your bank. We've talked about becoming your own bank. And being it is your own bank, you are the person funding the bank. You got to remember, we're in the mindset of being your own bank. Remember, what does a bank do? What is the function of a bank? Well, primarily banks take in deposits and give out loans. Take in deposits and give out loans. And if you were to circulate that, you can see where the money's coming from, right? If you don't know, just nod your head. Deposits and loans. Doesn't matter who the loans go to, but deposits must come back in. And it doesn't really matter where the deposits come from. So it can come from your Uber driving, it can come from your late night job, it can come from cutting grass. But you got to make deposits into your own bank. But when you loan yourself money, you got to remember that it's your bank. And if you took a loan from anybody else's bank, wouldn't you set up a payment schedule? You need to be setting up your payment schedule as if you owed XYZ Bank, XYZ Mortgage Company, XYZ student loan. If you guys can pay them back, you can pay yourself back. Why? Why? Because one, unlike a traditional loan, life insurance loans, they don't have a fixed repayment schedule. So yes, you have to kind of put on your grown-up shorts because there's nobody waking you up in the morning and telling you, hey, Susie, you got to pay your loan back. There's nobody doing that. And yes, your loan is gaining interest. So Susie, you're an adult now. Pay your loan back. Just continue to pay your loan back. But don't fret. The interest rate is much, much less than the taxes that you pay on your income. These are one of the reasons why wealthy people use loans instead of their cash and their income. So policyholders, they can repay it at any time. However, that's not what we teach in our classes, in my coaching classes. I want to make sure that you're able to put money back every time you get paid, if you can. You know, we want to be able to finance every dollar that we spend. But don't get it mixed up. Those are two separate types of deposits. One is new money, and then one is loan money. And a lot of times when people start early, they're putting in new money, and that's usually called a paid up additions rider, or an LPUA, a level paid up additions rider, where they can put money in over time to overfund the policy. And these dollars, if you're in the right type of plan, one that's custom designed for you, every time you put LPUA dollars in, you may be qualifying for dividends and interest at the end of each year that you have it. for the rest of your life. That's why the deposits of new money are so important. But today we're going to be talking about why it's important to pay yourself back from the loan. So in other words, if you got it on auto draft or you're doing some other things and you got your LPUA going in or your paid up additions going in, my recommendation to you is to set up a different direct deposit from your bank. One that's going to pay the PUA and one that's going to take care of a loan if you have one outstanding. So that way, when you put these dollars back towards the loan, somewhere on your check, somewhere on your check, it needs to say, hey, this is the loan payment. And then on the other one, it needs to say, this is your LPUA payment. And this is where I think a lot of you are making mistakes. Because if you're just putting in LPUA payments, but you're never paying back the loan, yes, you are increasing the potential for future dividends. But if you go on and on and on for a very long period of time without paying that loan, you could get bit by the interest bug. And we want to avoid getting bit by the interest bug. So the best thing to do at that point is probably split the amount of money that you're putting into your LPUA, send some to your LPUA, send some to your loan, and then you'll start to see that loan come down. Okay, so I just want to go ahead and help you manage this. Instead of making it a payment, make it something that's on automatic. I think it just works better that way, because when I get paid, I want to make sure that I'm getting the optimal opportunity to maximize every dollar that I make. So I might as well take my deposits and go get new money, LPUA money. And then if I need to take policy loans out, I can do so. And if I do take policy loans out, I know that I need to split those dollars and pay the loan back. I need to pay that loan back to myself, right? So let's move to number 3. Number 3 is the tax advantages. And I kind of went through that earlier. And tell me, guys, if you're out there and you're listening, give me a thumbs up, because I'm going through these things pretty quickly. And I'm wanting to touch base. Hey, Leela, I see you out there. I want to touch base with these things very quickly. And for those who are insurance advisors and financial professionals that may not have had a lot of work with loans, the ins and outs of loans, this may be helpful to you. So, the tax advantages. Number 3 is the tax advantages. We're here to talk about 5 reasons why people can benefit from paying back their life insurance loans. So, borrowing against your life insurance policy is generally tax-free. Yes, that's it. It's generally tax-free, as those loans are not considered taxable income. So this can be a significant advantage to you when you compare other loans out there. Okay, so I want you to keep in mind, the trick of it is understanding some of the taxes to the money that you use, whether it's income tax, estate tax, sales tax. We got to start asking the question, what kind of tax are we paying? Then you start to recognize the power of your insurance, because you start to understand the benefit and the tax advantages that you get by using this financial tool. Yes, because there's no taxes. There's no taxes on a policy loan. That's what it is. It's not very difficult. It's just not the thing that everybody's teaching you to say. So we want to make sure you get that opportunity to know exactly where we're going. Okay. So number 1. So today we're going to do number 4. Preservation of your policy. How do we preserve your policy? So you got to properly manage your life insurance policies, guys. Why? Because that is the centerpiece, the foundation the most important piece to your financial strategy, if you ask me, because this is where all your leveraging blocks lie. Okay? So if you're going to properly manage your policy, it ensures that your policy remains in force. That means that it doesn't lapse. It's providing you additional coverage and continued coverage and benefits as a policyholder. And you don't want to miss out on that. A lot of times when you're making additional payments to these policies, you may not recognize it, but your benefits are increasing as well as your cash value. So mismanagement of this, on the other hand, can lead your policy to lapsing. And we want to take away from lapsing. And also, there's other potential tax consequences that could be led to that if your policy were to lapse. They start to look at that as income. So you got to keep the policy in force so that you get all the tax advantages available to you. Am I making sense? Somebody out there, give me a thumbs up. Give me a heart. Give me a share. If I'm making sense to you. My frustration as an advisor is when, you have an opportunity to sit down with someone and the first thing they want to do is take a loan out the first day that they get their policies. And yes, it's perfectly fine if you do that, but have a strategy. It really doesn't work for you, and you're not giving it an opportunity to work for you if all you're doing is taking money in and taking money out. Really, the secret sauce to the life insurance piece and all pieces is the dividend. Remember, the reason why we do this is not because it's an investment, because life insurance is not an investment. It's a premium. It's a premium. And when I say that, so that you hear other advisors when they're talking, the word premium means it's after-tax dollars. The word investment means that it is taxable dollars, okay? So when you understand the mechanics of this thing, of how life insurance loans are working and how they impact your policy, the tax advantages are super. And the advantages of staying current on those repayments benefit you, your family, and your legacy, the long term. So whether you're considering a loan against the life insurance policy in a current way, hopefully in this video we've talked about some of the ways that you can use it so that you can make some informed decisions on why, and get rid of the myths that are all out there on the internet. Because the reality of life insurance loans and ensuring that you understand why you pay yourself back, it can be a smart financial move, and we want you to make smart financial decisions. Hey, and by the way, don't forget to subscribe to us. Hit this notification bell right down below if this is helping you out. If this is information that's maybe helping you out, or you've been struggling with it and hadn't had the opportunity to get some answers for yourself, I want you to consider letting us help you. Letting us help you, and stop by our website and go to lifestylefocuswealth.com and do some one-on-one coaching. Yes, I know. Sometimes you forget. Sometimes you need a reminder, and that's quite all right. Our job is just to make sure that you're knowing everything you need to know about your plan. Our job is to make sure that you're going to be focused on wealth, not the consumerism that we are accustomed to, right? We want to make sure that you're getting the right information. That's about it. That's pretty simple, right? We got any questions out there in the field? Are there any questions out there today? Is there anybody out there that has taken a loan and you want to share your experiences? Put it down in the comment. I'm gonna ask you to do so. If you've paid yourself back, the secret sauce. That's right, Sam. Dividends is part of the secret sauce. I really think this is the most understated piece of the insurance policy that we don't talk about, at least online or out loud. I want to also debunk something else. When you put your money into a policy, let's call it the paid up edition rider on your policy if it's there. You know, some of these agents out here don't even know what that means. So, but if that paid up edition rider is there, that's where new money or overfunded money would go. Remember, that money also helps the dividend. It calculates a dividend. It helps the calculation for your dividends. What does that mean? That means when dividends are calculated at the end of each year, if that insurance company is reporting those dividends and you're with a mutually held insurance company, not a stock held company, but a mutually held insurance company, that they have to share the wealth with everybody. So that means you're getting a check. But most wise advisors will probably have it where they've talked to you about the advantages of having it go right back into your policy and reinvest those dividends back into your policy. Why? Because it's giving you growth. I'm reading one of your comments here, so saying so you can take a loan from your policy and pay yourself back over time. The answer is yes. Yes. But I want to be careful with that statement because some people like to peel this thing apart. And when I say peel it apart, they're using choice words. The truth of it is you're not paying yourself back. You're paying the insurance company back. Because those dollars that you've put into the policy have never left. Those dollars that you gave to the life insurance company in your paid up edition rider or overfunding or whatever you want to call it, it's never left. It's almost like saying, hey, I got $5 in this hand and I'm going to borrow $4 in this hand. Your $5 never left. That's why it's still earning a dividend. That's why they call it uninterrupted dividends, because this hand is never changed. You've borrowed money from the insurance company's reserves. The insurance company has much, much, much more money than you do to leverage. And they're leveraging in two places. They take down the cash value. So yes, if you take loans, it does affect your policy and the benefits and the overall benefit of your policy. So it will decrease your cash value by the same amount plus interest. Okay. But also on the death benefit that's being leveraged, some people like to say you're borrowing against your death benefit. In other words, if I had a $100,000 death benefit and I took out a $10,000 loan, it's going to reduce my death benefit by $10,000. And my family will receive $90,000 if there was no interest due on that. Okay? If that makes sense. Good. You guys got the box open today. So you're saying, I can take out a loan. Here's a question that's in the field today. And it's an easy process. They didn't ask me for a series of questions. And how much do I want or where I should get it from? I was amazed. It was an amazing experience. Well, hey, you know what? Thank you for that. Thank you for that, Donna. I think that's Donna. Yes, Donna. Thank you for that. One of the other advantages of becoming your own bank is you're absolutely right. You don't have to share with the whole world what you're using it for. You don't have to fill out a whole bunch of paperwork. You just simply go to your insurance bank and request a loan. Yes, it's one step different. It's not as convenient as going to an ATM, but it's also giving you more benefits than going to an ATM. So, pick your poison. Pick your poison. So the next question says, while life insurance has a living benefit. So yes, these are some of the living benefits from the life insurance. So we're not even focused on the death benefit today. We know that 100% of our clients pass away. But how are you living your life right now? Are you ready? Look, the more ready we get you, the better off you're going to be. The more prepared you are right now, having your will in place, having your trust in place, having your corporations in place, designating who's going to receive these assets, how long are they going to receive them, who's going to manage them, having these discussions about your plans with your kids, include them. No, long gone the days that parents send their kids to the back room and don't talk to your children. I'm going to encourage you to have the conversation. If your kid's an athlete today, kids are getting hundreds and millions of dollars before they go to high school. So yes, we need to be talking about how do we effectively create a banking system for the family, but we got to make sure that when they borrow money, that they have the system and the knowledge of how to pay it back. When they do this, it only gives us an opportunity to use it over and over again. I hope that I'm going slow enough today that you're able to follow, because I hear so many different people who are not advisors speak so quickly in their 15-second interviews, and they leave out a lot of stuff. Yes, you can screw it up, but yes, you can make it up. And if you screw it up and you need to make it up, one of the best ways to do that is to call your advisor, set up a coaching session, and make sure that you're making the right moves. Don't try to go out here and do it all on your own just because you don't want to call your expert. That's the mistake on you. That's not the insurance company. That's not the advisor. That mistake is your mistake. If you're going to try to play a game without a coach, you should have probably just been a spectator. That's just my personal input on that. But that's how I feel. As you can see, I'm passionate about what we do so much that I just want to make sure I slow it down and make sure you get the information that you deserve, right? Most people that I've talked to always say that life insurance policies is only used for when I die or when I'm gone. Okay, well, they're misinformed. I would tell them, hey, you might want to check into our lifestyle focus team, because we are a group of people that are doing what millionaires and billionaires have done. If you go back and you check out the conversation of our Federal Reserve and you learn what JP Morgan Chase and the Rockefellers, what they've learned that changed the whole scope. I like to say they've put it in front of our face the whole time. The secret is in trust, the secret is in companies, and the secret is in banks. And if you don't have those three, you're having a lights out moment. The benefit of talking to us in our one-on-one session is that we're going to show you how to maximize using all three: trust, your company, your bank. Nobody else. There's no outsiders. I like what's going on in the chat box today. Cooking with Mama Bear has a lot to say today. I appreciate you checking in. Y'all keep those comments coming in. And so I have the opportunity to answer them. Let's move on to number 5. The last one I promised you is strategy, strategic financial planning. When utilizing this life insurance, loans can be a part of a broader financial strategy. It's important that we understand the strategy more than the product. Because if we understand the strategy, then everything else will make sense. And you have to make sure you're with a qualified advisor that can talk to you about the design and engineer it in such a way that now if you get off track, we can get you back on track, because you absolutely can utilize how this life insurance loan works for you. And allowing individuals like yourselves, you the viewers, to have the leverage of their policies and have the leverage of the cash value for various goals that you might want to use it for while you're maintaining the policy's benefits. You might want to pay off a car loan or a student loan, or maybe even you're going to consolidate a credit card. You'll find that those payments are much cheaper. But for those of you who would take a large sum of money out and then just forget about it, that might not be the best thing to do with your loans, even in life insurance. You wouldn't do that with a credit card either, because eventually it would build up to a point where you couldn't recover it. So we want to avoid that with all costs. I promise you this: by understanding all these aspects and how the policy can make you make better and more informed decisions that align with your financial goals, it ensures your long-term benefit. And you're in control of it. That's the one thing that I think is spectacular about this whole deal, is that you're in control of it. Okay? Boy, you guys are in the comments today. Y'all are in the comments today. I almost have to okay, let me share a story with you. One of our clients, Susan, we're going to call her Susan. Susan needed to borrow some money out to pay some debts down. She borrowed about $10,000 out, and she let this money sit for a while. She didn't understand how to make the payments back, but she knew that she could take the cash value. And during our review, we started to go through the questions, and we just did a review with her. And one of the things that we've already talked about in this program is that the policy death benefit goes down based on how much money you borrow out. And she was just going to leave it there. She was just going to let it catch up and eventually let the dividends pay the policy back. But that could be a period of time, depending on how you're funding it. A lot of things depend on how you manage it. But I also showed her the advantage of what happens when you pay it back. And this is what was exciting. It starts to restore that death benefit back to where it would be. And when you start to go beyond the amount of money that you borrowed out, in other words, she borrowed 10 grand. Now she's put back 12 grand, 15 grand, 20 grand. You start to see the policy escalating. You start to see those benefits going up. You start to see the death benefit as well as the cash value increasing. So you control that, right? You do. You absolutely do. We want to make sure you know that you do control it, right? I'm looking for more takeaways. Listen, if you're out there and you're listening and you're just visiting, I don't know that many people go this in depth on how these loans work. I'm willing to do that for you. But guess what? I need you to do one more thing. You can't just be taking, because I know that 70% of you guys aren't subscribed members. So do us a favor. Click that little button below, subscribe. Hit the notification bell. Join us. There are some benefits to becoming a member of our Lifestyle Focused Wealth community, but I can't give it all to you out here. Y'all are so greedy. Some of y'all are so greedy. No. If you want more coaching, you need to come get in line, get in our class. And if you're scared to pay your money to get in here, that's why you're probably behind. When we got to pay for coaching, when you pay for coaching, you are actually paying. Let me help some of you out that's struggling with the idea of having coaches in your life. When you pay for coaching, you're not paying for a product. You're paying for their expertise and you're paying for their time. You're paying for the 26 years that they've had to make the mistakes, in my case, train people, see things happen and develop. So when your plan is not working, it's not just your plan. It's because you don't have the experience to make it work. That's probably where you need to make sure you have your Lifestyle Focused Wealth coach. Am I making sense to you? And the earlier you subscribe to that idea, the less mistakes you make and the more time. The most valuable thing we have is time of your dollars and your assets growing. The more time you have to see this thing work in your favor. Okay? Thank you, Leela. The membership loves you too. I know you love the benefits that you're getting as a member. Hey, listen, when you want the back office talks, behind the scene talks, yes, we have our events. Yes, we have opportunities for you to go hang out. But I think the best part of it for me is when I can share the ideas that help you start winning at a faster pace. To give you the confidence. We don't sell insurance, we sell confidence here. That's right. We offer you confidence. When I put on my suit and tie, I want to go out into the world and know that I'm well dressed, I'm well groomed, I can articulate what I'm doing, and I know my exact why. My why, let me share a little Ronco Johnson why with you. My why is so that I could have more time on this planet with my daughter that is now turning 21 years old. When she was 8 years old, I had a lights out moment. But my second prayer was to help as many people as I could through our foundation work. The Ronco Johnson Foundation today is help so many people with information all across the United States and abroad. And we've brought it to this broadcast so that we can help you. So I hope that you take this information. I hope that this has been helpful to you. I hope that you've become a new subscriber to our podcast and become a friend of ours. And if you see me out and about, I hope you come up and say hello. I really do. I really do. Are there any more questions today? Any more questions? Come on, you guys out there in the field. I know you got one for me. Today's video is a little shorter than normal. I see. I see. I see. Thank you so much for the likes on my shirt. I really appreciate that. Thank you very much. Hey, listen, that's my time for today. If you guys don't have any more questions, I want to ask you to go to lifestylefocuswealth.com and schedule some one-on-one time with us. Join our community. We'd love to have you because everything you need is in the room. And boy, I would love to just tell you how much more I want to tell you, but you got to be part of our coaching session, our one-on-one sessions, our group sessions, and we got a couple of challenges coming up that I can't wait to see you guys in the room and share with you some extra secret sauce on top of what we've been giving you for the last few months. And I want to go ahead and also thank you guys for tuning in. And I love watching our viewership go up because of people like you guys. All right. If it was not you, we couldn't do the things that we do. Yes, look, I still see the comments coming in, so I'm gonna try to see if I miss anybody before I just run off here. Oh, you ladies are sweet. Thank you very much. I love you guys too. Hey, thank you very much for tuning in. This is Lifestyle Focus Wealth, and it is Lifestyle Focus Friday. I just want you guys to remember when you're out there, be safe this weekend. I know a lot of you are back to school. If you got kids going back to college, be safe on the roads out there. Be sure you tell your family and your friends that you love them, you care for them, and don't keep it a secret. All right? Don't keep it a secret. What good is a secret if you're the only one that's winning? It's much better when you have all your family and friends in the winner circle with you. All right? So, hey, that's my time. I'm Ronco Johnson. This is When the Lights Go Out. Are you ready? Thank you guys for joining us, and we will see you next time. Have a good weekend, and I'll see you next Friday right here at 1 p.m. See you soon.